As we're in such a tumultuous time right now, there's a lot of uncertainty, and in the space of uncertainty, people do typically two things. They act irrationally and make some decisions that they later regret, or they embrace it. And through that mechanism, when you embrace it, you really begin to climb the scale of multiple revenue streams, because you really were prepared for winter when it came upon you through proper planning. I've seen it time and time again. So I'm with my partner, David Harder.
Hey, Rob.
What's up, D?
What's up, buddy?
And today we're going to talk about how can I protect my 401k from a down market without taking any risk. And, I guess these are the questions that people are asking.
Yeah.
And I'm not, this is, listen, I want people to ask questions, but it's not true.
Right.
You can't if you walk off across the street, you're taking risks.
Sure.
If when you come out of the shower and if the floor is wet, you're taking risks.
Right. Yeah.
If you put money in cash in a bank account, you're taking risk. Why? Because inflation's at 8%.
Yep.
So if you have $100,000,
Yep.
and inflation's at 8%, it doesn't change. A year later, it's worth $92,000, right?
And was that money meant for growth? Right? Did I miss out on growth as well?
Because you're scared. Is that what you mean when you say that?
Fear and greed, brother.
Yeah.
Yeah.
So I think that I'll make it simple for you. No, there's no such thing. You can't grow your 401k without taking any risk, to be clear.
Right.
Now, can you increase the probabilities that if, in fact, the market turns around, your 401k will perform with the market? Well, the answer is yes.
Yes.
Do you know what the fees are? Right? What are some of the questions that they should be thinking about, Dave, when it comes to their 401k?
Well, they should be thinking about the fees.
Yep.
They should be thinking about, okay, am I going to take an active management approach towards
So
it?
explain that. So you work for so-and-so corporation.
Yeah.
There's a 401k there.
Yeah.
How do you find out what the fees are?
Well, you can get a Morningstar report on all of the different mutual funds that are offered inside of it. Typically, 99.9% of the time, it's going to be all mutual funds. Sometimes it might be annuity-based, like with accumulation units.
But hold on. Go slow for these folks.
Yeah.
What kind of fees are they looking at there?
Depending on the share class, you could be looking at, anywhere between 0.25 to maybe 1% internal expenses on the management of just that fund.
Is there more fees that we're not thinking about in there? Like give me the nightmare version first.
Yep.
Right? And then we could kind of distill it down to like a responsible employer who kind of strips out the fees and really allows for the growth.
Honestly, the fee is the fee that they haven't paid yet, too.
No, we're not talking about taxes yet. I don't even want to go there. I'm talking about each fund. Like,
yep.
Could some of it be over 1 or 2%? Like on these different funds that
it could
they don't even know.
It could some of the funds that invest in alternative strategies, right? I'm not talking about hedge funds, right? But they talk like total return funds. There's a lot of active trading that happens in those, right? And when there's active trading, there's costs to trade, right? So the internal expenses, even if it's a class like one of the low fee share classes, like an R share or something like that is what they're referred to, they still maintain internal expenses.
So let me take this further, because this is so important for everybody out there.
Yeah.
If you want to find out what those fees are, you have to jump through hoops just to get that answer.
You
correct?
do. Yes, you do.
And then if you want to see what the fees are, they're in like fine print that's so small that you need glasses that are so thick you could see the future.
Yes,
right?
Correct.
So let me ask you this. Like, how hard is it really to find this information out? Because this is about risk. So if you want to make sure that you're paying the least amount of fees, and I'm just going to, let's say it's, 0.25 basis points, right? Mm-hmm. And the market goes up 4%, because of inflation, you're still down 4%.
Right.
Now, if the market goes up 4%, and between the hidden fees, the known fees, the non-fees, the all-in fees, if that's 2 or 3%, well, then you're really losing money because inflation is eroding at it.
Yeah, totally.
So I think the fee conversation is so important because it happens every year, and it's assumed that there's no fees, but the truth is there's a lot of wealth destroyed because of those fees.
What's amazing too, I believe everybody should get paid. But, when you're an advisor that's the advisor of record on a 401k plan, and I'm speaking to you financial advisors.
And you're not a fiduciary, to be
I
clear.
am not a
fiduciary. You're
fiduciary.
educated in this
Correct.
space. Yep.
I'm educated highly in this space. I am not a fiduciary, but...
And you're not giving investment advice?
I am not giving investment advice. If you're an advisor of record on a 401k plan and you're not having conversation with people about diversification and risk diversification, you're doing them a disservice, right? I think that, to your point, Rob, with inflation and with fees, right now it's so hard to keep up with wealth creation, right? You essentially have to exceed 8% or more, even just to keep up with
to break even.
Just to break even the
Not
buying
even
power on your
taxes.
money. That's exactly right.
Yeah.
So for those of you who only have a 401k as your primary savings vehicle, number one, congratulations for saving money. All right. First and foremost, you ought to be applauded for that. But also, I think that you should be made aware, or you should take the time to make a phone call either to the servicing department of the 401k or the advisor of record themselves. Make them earn their fee because they are getting paid for that account.
And they're going to do everything they can not to give you an answer, just to be clear.
Yeah.
Right? There's
Yeah.
going to be all kinds of like smoke and mirrors.
Fear pops in.
With all kinds of shadows, and you're not going to get all the answers right away. So you got to, but if you go through the painful experience, it's like a Harvard degree. And once you know that information, you could deploy your mind differently. And going forward, the universe is so amazing that all of a sudden you'll have different information come your way to take advantage of different opportunities.
Yeah.
Because people talk about annuities, fixed annuities. What does it look like in these different places? How can I kind of play my 401k? By the way, is there a non-hardship in-service withdrawal
Thank you.
on my 401k?
Thank you.
Can I go in and take a portion of that money, move it over to an IRA, have more investment choices? We're not recommending this. And at the end of the day, because of that, be able to take advantage of opportunities that I can't within my 401k.
Right.
Once again, this is about risk.
Yeah, and there's also a risk of not knowing what your leverage options look like. If you're a participant in a plan, be made aware of whether or not you can borrow against your K. Right? Don't go through life not being aware of the liquidity that is available to you, and make the advisor give you that information. Right? They have to make them earn their stripes. We talk about taking risk off the table, right?
Earn your stripes. Shout out to the fort.
What if you shout out to the fort? What if you had the option? I am not suggesting this. Clear. I am not suggesting. But what if you had the option to borrow some of your own money from the K? Right? Are you going to have to repay that? Sure.
Well,
right?
hold on. Let's play with this because now you're throwing it out there. So what you're saying is that certain 401ks you could borrow money.
Yes.
And I believe you could borrow up to $50,000.
Correct.
That's the max.
Yes.
Now, David's not suggesting this, but for the astute investor that's out there that may look at other investment opportunities, it's available. Just know that if you borrow from a 401k, so let's say hypothetically it's worth $500,000. You take 50 out, there's 450 that's now earning a rate of return in the market, not the full 500. And when you pay it back, you're going to pay it back through your paycheck with after-tax dollars, only to get taxed on it again at ordinary income later on.
Right.
But I think what Dave's saying is if you're understanding inflation and understanding the power of now dollars, by borrowing 50 from the 401k, there's no taxes and there's no penalty.
Correct.
And you may find a piece of investment real estate that you
That's
like. That's
exactly my point.
That's giving you those multiple different rates of return, whether it's cash flow, mortgage interest write-off, depreciation, and/or it appreciates over time. In that scenario, if you're disciplined and if you have the right team, it may not be a bad decision, especially if you're not taking the money but you're using it to pay back the money that you borrowed from in the first place.
Guys, money's like matter. It gets created all the time but never destroyed, right? It just moves around all over the place, right? And so what Rob was just sharing is diversification of risk, right? Risk does not only exist in markets, it exists everywhere. But the question is it compensatable risk? Is it risk that is going to provide me either a short or a long-term return, right? Is it educated to take on the risk of moving that money into that strategic
And what if
investment?
right now they're saying, what did he just say?
Educated risk, compensatable risk.
What is that?
Risk that's going to provide me an adjusted return that is sensible that I can predict.
You mean like what?
Well, what I mean, like cash flow, right?
Okay. You mean like a piece of real estate that produces cash flow?
Correct.
Is that what you mean?
That's correct.
Okay.
That's exactly right.
So, but you can't guarantee it. But I think the question is, how do I protect in a down market or without taking extra risk in my 401k in a down market?
Well, look, if I have a short runway, Rob, to the point that I retire, one of the things that I see a lot of, and that my clients have used it in the past, are fixed annuities. Right.
Okay.
And one of the, is it the right fit for you? I have no idea. Right. That's through consultation.
And you can't just offer that up in this conversation, but it's really a sit down. If they click the link below.
Right.
And if they, with no obligation, if they set up a time to speak with you or one of the team members at Epic, you would not just say, hey, do a fixed annuity or hey, do life or real estate. But what you would do is do a full consultation, a checkup from the neck up.
Correct.
And from there, you'd be able to offer some suggestions. And one of the things that sticks to your head if you want to eliminate risk is a fixed annuity.
One size fits all does not work in our world, folks. It's consultative, right? Everybody has unique circumstances. A fixed annuity may be something that's appropriate for you. It could be. What's interesting about them is it can keep your money working for you to a degree. It can create a predictable income stream during retirement. And look, if I retired this year, I'm scared to death if my only asset was in the market, right? If it was a 401k. Because, look, the market may end up this year, but if you're spending that, you're not up, right? And so if I don't have the luxury of the time of some of these genius financial instruments that have been created just because it's no longer the right fit for me, right? Well, I have to identify and understand what could be a solution and a bridge for me. And a lot of times fixed annuities can be.
Yeah, and by the way, we're not, David's not representing a fixed annuity cowboy, because sometimes you'll get across folks that will tell you to put everything into a fixed annuity or everything into a indexed,
fixed index annuities,
annuity, whatever the case may be.
Nope.
It's still part of an overall calculation based on your age, your tolerance of risk, based on what you're looking for the next 20 or 30 years, and based on your income. All these things are factored in. And I know this is complicated. I know it feels a little bit sticky, but if you stay here, if you stay connected, this is high-level education that's going on right now that a lot of folks in the business that we're talking about just don't have the patience to hire Danny and hire Parker and have a video team and bring Billy in to come up with topics and ideas, and have Eddie over there directing all the different things. And there's about 10 people in the room right now that are part of this video, including Santos and Hector over there. We call him Kevin. At the end of the day, this is all part of what it looks like. So you in Arkansas could hear our message, or in Texas or in Maine or in New Jersey or in Utah or in California. There's a lot of work that we're putting into this because we want to give you information. I'm painting this picture for a reason, because I grew up like you, David, blue collar. Bayonne, New Jersey, 75,000 people. My dad worked 3 jobs. They had no financial education. They always ran out of money by the 21st of every month. And from the 22nd to the 30th, we bounced checks, relentlessly bounced checks. And as a result of it, it was a financially scarce mindset that I brought with me into my 20s, even into my early 30s, because when I made my first wave of money, I acted the fool from someone that never had money before, right? So I'm trying to take all that information, turn decades into days for all you good folks that are out there to understand that there's no overnight get rich quick. I don't care if you bought XRP or any of those TikTok stocks or Bitcoins that made a lot of money. At the end of the day, you're experiencing what I experienced in 2000, which is when the internet stocks blew up.
Right.
There's no such thing as an overnight success. If you turn 30 grand into 100, traded it out, you still owe 30 in taxes. And you're chasing a rate of return. Don't do it no more. Don't do it. Understand a 401k when it comes to the level of fees and risk. Understand there's things you could do off the 401k, and understand that you could build models and methodologies through the integration and coordination because you're already a very good saver. And I think that for all these folks, I know you care. I really want them to get the education that we have. I know.
Rob, we're blessed that we have conversations literally every single day with people that are looking for, even just this morning, I had a conversation with a guy. He's, worked in IT for years. He's been a diligent saver, went overseas, right? Saw a different culture, but also shared with me, I just turned 40 and all of a sudden I saw this different culture and I recognized my own mortality. And I'm like,
light bulb.
Absolutely. Yep. Light bulb. And so now wants to look at alternative strategies, not because he wants to just throw his money onto the poker table and see if he wins, right? He's not all in, but he wants to see different options because he has to believe that there's a better method of creating residualized income and generational wealth for his family. And the fact of the matter is that, we can't predict what's going to happen with the real estate market, private equity, any market out there. We can't predict that, right? But what we do know is that through appropriate process, individual process, we can map out and create a strategy for what we feel is going to be the path of least resistance for you to creating that abundance based off what you want, not what financial America wants.
Yeah,
right?
it's uninterrupted interest with leverage, liquidity, and control. Go ahead and click that link below. Once again, we love to take you through the success process. There's no obligation. One of the team members here at Epic will sit down with you, create a customized plan that sits and fits with your core values, not what we think you should do, but really understand who you are, why you are who you are, and where you want to go, and show you the map and where you are on the map, and how to get to the end of that map, not on back roads with stop signs, potholes, and dirt roads, right? But on a highway that's very efficient and gets you there much faster, turning decades into days. Thank you for being part of the channel, checking us out. Every day we're dropping new content, and we'd love to be in your living room and be able to take you through our success process. Have a great day.